Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Gragnani, Head of Research and Client Engagement with Nasdaq Dorsey, Wright, to discuss support levels in the S&P 500 and sector winners and losers. Jay, it's great to see you as always. Welcome back to Trade Talks.
Hey, Jill, great to be here. Thanks for having me.
You got it. When we think about the recent market volatility, what are some of the key levels that you're watching in the S&P 500?
Yeah, it has been. I mean, January started off 2022 on a bit volatile note after some relatively stable growth in the equity markets. I mean, we saw the first 10% correction that we've seen in nearly 2 years come in the month of January. And as we kind of step back and look at things, we've certainly seen some deterioration across some indicators. But if we take a step back and we look at the S&P 500 right now, we see from a support level, the S&P 500 continues to hover right around its 200-day moving average. That would certainly be seen as a longer-term area of support. Also, in the 4,400 area is going to be a sign of support. After that, you're looking at 4,250. But right here, you're seeing the S&P 500 certainly, at least for the time being, has held some of that near-term support that it's built up.
And Jay, when we take a look at trends, I know that you watch the percentage of stocks in positive trend. Have you seen anything noticeable there?
Yeah, so it certainly has been declining quite a bit over the course of the past few months, to the point that it's now down to 62%. And what that means is 62% of all S&P 500 stocks are in positive trends today. But saying that, differently, you're getting to a point now where there's a considerable number of stocks that are trading in positive trends, and you've seen some of that deterioration happen. The line that we really watch there is 50%. If we fall below 50%, that's typically when we see much more weakness permeate the markets, as basically what that would tell us is that a majority of stocks are in negative trends. Not the case today. However, we have seen a number of individual names, individual stocks, and really across a lot of sectors have moved into negative trends. So that is certainly something that we're watching closely, and we'll continue to monitor that.
Well, let's talk about the sector winners and losers. The two winners don't surprise me, but the one that stands out as a loser does a little bit compared to where we're seeing some home prices.
Yeah, well, that's right. I mean, real prices are up everywhere. However, this year, real estate has been the sector that has been hit the hardest, conceivably on the heels of inflationary numbers coming out, interest rates going up. But you're right. You look at energy and financials are the two best performing sectors so far this year. Energy has done so, and it really coming off of 2021, where it's had the best performance it's had in a while, and being the best performing sector. But right now, you're looking at energy prices, individual stocks up over 20%, and crude oil, energy commodities have played a big part of that. And then financials. I mean, those two sectors, energy and financials, are the only two that are in positive territory as of right now for the year. And both of those sectors tend to do and have historically done pretty well as interest rates move up. And so we'll continue to see if that shines through the rest of the year.
And Jay, if memory serves me correctly, since I've been covering Nasdaq Dorsey Wright, when it comes to asset classes, equities have been leading the way for quite some time now, but you're starting to see that it could be overtaken by something else.
Yeah, you're exactly right. I mean, U.S. equities has been the dominant asset class for years in the markets, and that's not always the case. You go back to the early 2000s, and really that decade was about international and non-U.S. equities, but really the past decade or so, U.S. equities have been the best performing asset class. However, what we saw happen just recently is U.S. equities, the recent volatility caused U.S. equities to fall out of the top spot and is now sitting at number 2, and commodities has moved in there. Commodities is now the number 1 ranked asset class, led by crude oil, which is the biggest within a lot of commodity indexes. But really, I mean, in order for something, an asset class like commodities, to move up in strength like that, we have to see a broad rally in the commodity markets. And that's exactly what we've seen. It hasn't just been in crude oil or one or two commodities. It's really been a broad brush rally. And crude obviously gets the most news coverage. It's the biggest, as it should. But you look at other things like coffee prices. Coffee futures are up 11%. You look at cotton futures up 9%. And so just this year. And so we're certainly seeing the impacts of that. And if you go out to eat, if you go buy gas, if you do, you know that prices have gone up, and that's what you're seeing with commodities moving up to that number 1 ranked asset class, as we've seen crude oil move back up into the $90 barrel level. So yeah, so right now, U.S. equities has slipped out of that top spot given some of the recent weakness that we've seen, and commodities now moves into that number one spot. And there's lots of ways to take advantage of that, lots of ways to gain exposure to commodities, not just through futures, but through exchange traded funds, through mutual funds, and a number of different investment vehicles can do that. But right now, commodities, number one spot.
It's going to be tough as you're trying to fight inflation, won't it be, Jay? If we see, commodity prices, the underlying of everything that goes into all the products that we make, if it goes higher. So that could potentially be challenging for the consumer. We'll have to see how this plays out. As always, thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.